also like to welcome on the CNBC TV18 budget headquarters our budget editors, Atanu Chakrabarti, the former Economic Affairs Secretary, now the Chairman of HDFC Bank, and Rathin Roy. Gentlemen, thank you very much for joining us. Well, not so bright and early, but bright and early for a Saturday morning for certain. Mr. Chakrabarti, let me start by asking you, overnight, any epiphanies on what possibly the Finance Minister could do or may do? Any out-of-the-box ideas at this point in time?
Well, all ideas are in the box, I guess.
they've been sealed. They've been sealed. Now they only have to be delivered. But you know, Nilesh Shah was just talking about what could blow the market's mind. Possible gold monetization scheme, sovereign wealth fund, taxing those who are out of the tax net, perhaps taxing Indians who are leaving Indian shores, to go abroad. You think that any of that is something that the government may want to consider?
Well, government had on the gold front, gold monetization has been thought through, but frankly, even the sovereign gold bonds which had come out have been costing a lot. They are quite expensive for the government. Perhaps in some fashion if it could be used, but in any case the market is using it to create credit. So to some extent that's getting used without government getting into it.
And you're right, they pulled back even as far as the sovereign gold bonds are concerned because of how much it was costing the government.
Etc. Again, the idea of sovereign wealth funds have been there for quite some time, but it has to be linked to a very strong, powerful disinvestment program. It was talked about.
Any hope on that? Any hope on that? A very strong disinvestment program?
I have my prayers on that.
So you're not hoping?
I wish that disinvestment program picks up. Unfortunately, a lot of ideological things were attached to it. When it was happening, it was going great guns, almost 1 lakh crore per annum was happening. People said that companies are not getting privatized. So the ownership debate started and virtually killed the program. The narrative on which, frankly, which also happened perhaps from your studios, also to some extent killed it. I think people going out of India make for huge amount of remittances into the country. So taxing any of them, I don't think would not be a very sound economic idea. Because entry on exit of people, free market of, let me use the word labor in that sense of term, as well as free market for capital. These are two essential prerequisites to maintain our growth rates.
Absolutely. Rathin Roy, literally about an hour and a half away from the budget now, do you believe that in terms of priorities, things are likely to change, or it will continue to be capex, some sweeteners as far as consumption is concerned, and sticking to consolidation?
I certainly hope so, because I take a fairly realistic view of what government is capable of and what government is not capable of. And I'm very clear that the structural problems that the Indian economy faces are not going to be solved by tinkering with the budget. They require much more sort of whole of government action. So the best thing you can do in a budget is maintain macroeconomic stability, try and ensure that the budget does not respond to stuff like making markets go mad. Market going mad is the equivalent of a mujra. I don't want the market to get excited over mujra. I want the market to be excited over Indian economic fundamentals. So if the budget speaks to Indian economic fundamentals, and that involves stability, that would be a very good thing. And therefore, these kinds of everything that you mentioned that could happen in the budget will have an infra-marginal, irrelevant impact on the public finances. I think Atanu is right that the only place, we are not a net commodity exporter. Sovereign wealth funds are normally run by net commodity exporters. So if you did not want to spend disinvestment receipts in the year in which they were incurred, you might want to run a sovereign wealth fund for that. But that is irrelevant now, because the government is, in my view, not capable of disinvestment. And that is why you have this, the worst situation ever, I think, was in 2019, was it? When the government claimed they would do something like 2 lakh crores of disinvestment, end up with some pathetic number, 25,000, 30,000. That is the kind of nonsense that diminishes our credibility elsewhere. I must compliment the government. Since that date, if you either look at tax forecasts, whether you look at disinvestment forecasts, they've been very modest. very achievable, and the government more or less has delivered.
Yes.
If you look at the RE, what it said it would in the BE. I'm hoping that track record continues, and the government delivers in terms of, on the taxation side, in the RE what it said in the BE. On the expenditure side, I think the government is in a bind, which is important to understand. We're very interested to see how the finance ministry resolves this bind. If you reduce taxes, you reduce the space for public expenditure. You will therefore either have to cut expenditure as a percentage of GDP or increase borrowing. If you increase borrowing, you put further pressure on bond yields, which is not going to be a good signal for the markets. So that's I think, the real bind, that even small reductions in the tax GDP ratio, might win. Now people say corporate taxes have fallen. The only way, frankly, you can raise corporate taxes is by raising corporate tax rates.
Which I mean, seems highly unlikely at this point.
Because profitability has fallen, you see.
Not just that, but also the signal that you send out. I mean, you're saying that you want to revive private investment and then to be able to even consider the possibility of hiking corporate tax
I have a mild disagreement there, because I think private investment has not revived with low corporate tax rates.
No,
so if you want to make a trade-off
point.
and you want to increase private consumption demand of the rich, remember only the rich pay income tax in India, 3.5 times the per capita income, then you could raise corporate tax rates and lower personal income tax rates. But again, the impact would be inframarginal. So I agree with you. I mean, it wouldn't be, I don't see any great urgency for the finance minister to do it. So I think this ought to be a steady as you grow budget. Normally with that sort of budget, you will see a lot of dramatic rhetoric. The Prime Minister already started his rhetoric yesterday. I expect to see a little more of that in the last budget. The last 3 budgets have been shorn of rhetoric because the Finance Ministry had a job to do. They had to deal with COVID, they had to reduce the fiscal deficit, and therefore the Finance Minister's speeches were mercifully short. I'm saying something to listeners. The longer the speech, the less substantive will be the budget. So watch that speech.
Well, we will watch this speech. A quick final comment from you before I toss it back to Bombay. Mr. Chakrabarti, on the expenditure side now, this balancing act that they will need to do, something will have to be put on the table, something will have to be sacrificed. What is it likely to be?
Well, Rathin has very rightly said, your space on the face of it looks very limited. But it's very important to do the fiscal consolidation, otherwise to control the horses of inflation would become difficult, because fiscal policy and monetary policy are somewhere joined at the hip. Therefore, I guess a time has come to have another expenditure commission for somebody to sit down, go line item by line item. There's a lot of junk which remains, people miss it out. They go in as standing charges which need to be removed. And cut it out and make it much more leaner organization. Government has to become small,
so
more effective.
Own version of Dodge.
Well, not in that sense, but however, not something overnight, not something which is sort of shakes the market, but something which requires...
No, fair point.
It happened with the last, there were 2 expenditure commissions, which did a reasonably good job in setting, and that cuts at the margins, but very effective.
Well, that is certainly an idea that we don't know whether the government will take forward this time around or not, but our budget editors are going to be here with us through the day analyzing the fine print, and they have the experience of doing that, but for now it's back to the markets. Lata Prashant Surbi, over to you.